Okay, so you want to own a car wash, and honestly, you can see why. You drive past one on a Saturday morning, the line is wrapped around the block, cars are moving through every 45 seconds, and there's a guy standing near the exit handing back keys with a smile. You do the math in your head without even trying. $40 a wash, maybe 60 cars an hour. That's $2,400 an hour, and the thing runs itself. You don't need inventory. You don't need a chef. You don't need to manage a dining room full of unhappy customers. You just need water, soap, and a long enough driveway. The money practically walks in on its own four wheels. Here's the problem. That Saturday morning line is the single most misleading piece of data you will ever collect about this business. And almost everything you just calculated is working against you in ways you haven't even started to see yet. So let's actually walk through this. Not the dream version, the real version. You start with the land. That's where most people's business plan quietly dies before it ever gets written down. A car wash is not a business you can run out of a strip mall corner unit or a converted garage. You need a specific kind of real estate. High traffic count, high visibility, easy ingress and egress. Enough lot depth to stack cars without backing up onto a public road. In a mid-sized American city, a piece of land that checks all those boxes costs you somewhere between $800,000 and $2 million just to acquire. And that's before you've broken ground on anything. Before you've poured a single foot of concrete. Before you've ordered a single piece of equipment. Now, here's where the numbers start doing something uncomfortable. The tunnel itself, the conveyor system, the blowers, the chemical dispensers, the point-of-sale system, the canopy structure, the vacuum stations out front. You're looking at another $1.5 to $2.5 million just for the build-out and equipment. A full express exterior car wash, the kind you see everywhere now. The kind that runs on membership costs between $3 and $5 million all in before it washes a single car. Some markets push that number past $6 million, and that's a relatively modest, single-site, no-frills operation. You hear that number and you think, okay, that's a lot, but the revenue will cover it. And that's not wrong. But the way it covers it, and the way it sometimes doesn't, is where this business gets genuinely interesting. The car wash industry in the United States does about $15 billion a year. That number has been growing steadily for over a decade. And the reason it keeps growing isn't that Americans are getting dirtier cars. It's that the industry went through a structural transformation that completely changed the economics of the business. And most people who think they understand car washes haven't processed what that transformation actually means. For most of the 20th century, a car wash was a transactional business. You drive in, you pay $5, you get a wash, you leave. Revenue was entirely dependent on volume, and volume was entirely dependent on weather and traffic patterns. A rainy week in November didn't just slow the business down. It could wipe out 30% of your monthly revenue in a single stretch of bad weather. Operators were essentially hostages to the sky. They couldn't smooth out revenue, couldn't predict cash flow, couldn't build anything resembling a reliable financial model. The business made money in the summer and bled in the winter, and the whole enterprise felt more like farming than finance. Then somewhere around 2010 to 2015, a small group of operators had the same realization that Netflix and Spotify were having at roughly the same time. Subscriptions change everything. Not just the revenue model, the entire psychology of the customer relationship. Here's what a monthly unlimited wash membership actually does to a car wash business. It converts your most weather-sensitive revenue stream into a fixed monthly payment that lands in your account regardless of whether it rains for 3 weeks straight. A customer who pays $30 a month for unlimited washes becomes, in accounting terms, something much more valuable than a customer who pays $8 per wash. They become predictable, and predictability in a capital-intensive business with heavy fixed costs is worth an enormous amount of money. The math bears this out in a way that's almost startling once you see it. A single-site express car wash that does 80% of its revenue through memberships can generate somewhere between $1 and $2 million annually in membership revenue alone before a single retail wash transaction occurs. If that site has 3,000 to 4,000 active members paying $30 to $40 a month, you are collecting somewhere between $108,000 and $160,000 every single month automatically before anyone has driven into your tunnel. Your fixed costs, debt service, labor, chemicals, utilities, maintenance, are largely covered before you open your doors on the first of the month. That's the model that private equity fell in love with. And the moment private equity fell in love with it, the car wash industry started doing something it had never done before. It started consolidating at an extraordinary rate. Between 2019 and 2023, private equity firms poured billions of dollars into car wash acquisitions. Companies like Mr. Car Wash, Magnolia Car Wash, and Zeeps Car Wash started buying up single-site and small chain operators at valuations that seemed, to the operators receiving those checks, almost too good to be true. A well-run car wash doing $1.5 million a year in revenue might get acquired at a 7 to 10 times EBITDA multiple, meaning the operator walks away with $10 to $15 million for a single site that cost them $4 million to build. That acquisition wave did two things simultaneously. It validated the membership model as the dominant financial framework for the industry, and it drove up the cost of entry for everyone trying to get into the business the traditional way, one site at a time. So now you're sitting there, looking at this business, trying to figure out where you actually fit. And the answer depends heavily on which version of the car wash business you're actually buying into, because they are genuinely different businesses wearing the same name. There's the full-service car wash, where attendants clean the interior, vacuum the floors, wipe down the dashboard. High ticket prices, $15 to $40 per wash, high labor costs, slow throughput, maybe 20 to 30 cars per hour on a good day. The customer experience is better, but the economics are harder. Labor is your biggest variable cost, and labor is the one thing you cannot automate your way out of in a full-service model. There's the in-bay automatic, the kind you see at gas stations, where a machine moves around the stationary car. Lower throughput, lower capital costs, but also lower revenue ceiling. An in-bay unit might wash 15 to 20 cars per hour, max. These tend to work well as add-on revenue for an existing gas station or convenience store, but as a standalone business, they have a hard time generating enough volume to justify major capital investment. And then there's the express exterior tunnel, the one everyone is building right now, the one private equity is obsessed with, the one that runs on memberships and moves 60 to 100 cars per hour through a fixed conveyor system, while keeping labor to 3 to 6 employees per shift. This is the model that changed the economics of the industry. High capital costs up front, but once the membership base is established, the unit economics start working in your favor in a way that very few businesses of this scale can match. Your break-even analysis on an express exterior tunnel looks something like this. You've got monthly debt service somewhere around $40,000 to $60,000, depending on your financing structure and how much equity you put in at the start. You've got labor at $20,000 to $30,000 a month. Chemicals and utilities run another $8,000 to $15,000. Insurance, maintenance, miscellaneous overhead. Call it another $5,000 to $10,000. You're looking at total fixed and semi-fixed monthly costs, somewhere in the range of $75,000 to $115,000. To cover that with memberships at $35 a month, you need somewhere between 2,100 and 3,300 active members just to break even on your operating costs without touching your principal repayment in any meaningful way. Most new sites take 12 to 24 months to build a membership base of that size, which means your first year or two, you are very likely operating at a loss or a very thin margin, even if the site looks busy. This is the part of the car wash business that the Saturday Morning Line does not tell you. A busy tunnel is not necessarily a profitable tunnel. Volume without membership penetration is just activity. Activity that looks like success from the outside, while your bank account tells a different story on the 15th of every month. The chemical cost piece also deserves more attention than it usually gets. A car wash consumes a surprising amount of product: tire shine, pre-soak, spot-free rinse, foam wax, and the per-car chemical cost runs somewhere between 50 cents and $1.50, depending on your package, mix, and supplier relationships. At high volume, say 800 to 1,200 cars a day, chemical costs alone can run $15,000 to $25,000 a month. And unlike labor, you can't just send chemicals home early when it gets slow. Water reclamation is another cost center that new operators consistently underestimate. Depending on your municipality, water usage at a high-volume car wash can be significant enough to warrant reclaim systems that capture and recycle wash water. Those systems cost money to install and maintain, but in drought-prone regions or areas with high water rates, they're not optional. Some municipalities won't issue a car wash permit without them. You're looking at anywhere from $50,000 to $150,000 for a water reclaim system, and it needs to be maintained, or it becomes a liability and a compliance issue simultaneously. Equipment maintenance is the other silent killer. A car wash tunnel is an industrial machine operating in a wet, chemical-laden environment, running 10 to 14 hours a day, 6 to 7 days a week. The brushes, the conveyor, the blowers, the chemical pumps, they wear out, they break down. And when they break down on a Saturday in July, you're not just looking at a repair bill. You're looking at lost revenue on your highest volume day of the week, frustrated members who are going to call your customer service line, and the very real possibility that a bad experience causes a percentage of those members to cancel. Operators who have run these sites for years will tell you that you should budget 2 to 3% of revenue annually for equipment maintenance and repairs. And that number can spike dramatically if you have a major mechanical failure. A conveyor replacement or a drive motor failure can cost $20,000 to $40,000 in parts and labor. It doesn't happen every year, but it happens. And when it happens fast. Here's the thing nobody talks about when they're selling you the car wash dream. The membership model is brilliant when it works, and it is brutal when it churns. Churn. The rate at which members cancel their subscriptions is the single most important operational metric in a membership-based car wash, and it is the one that new operators most frequently ignore until it bites them. A site with 3,000 active members and a 4% monthly churn rate is losing 120 members a month. To stay flat, you need to acquire 120 new members every single month just to maintain your revenue baseline. To grow, you need to acquire more than that. New member acquisition doesn't happen automatically. It requires marketing spend, promotional pricing, staff training on upselling at the point of sale, and a customer experience good enough that word of mouth actually works in your favor. The sites that figure this out early, that treat member acquisition and retention as operational functions as important as equipment maintenance, tend to build membership bases that compound over time. The sites that treat the business as a set-it-and-forget-it physical asset tend to plateau or decline after the initial ramp-up period, and then they wonder why their numbers don't look like the projections in the broker's pitch deck. Speaking of broker pitch decks, if you are seriously evaluating a car wash acquisition, the number you should be most suspicious of is the normalized EBITDA figure. Sellers love to normalize, meaning they add back expenses they consider one-time or non-recurring to make the earnings number look cleaner. That marketing campaign they ran last year normalized out. The equipment repair they had in Q3 normalized out. The manager's salary that's about to go up because you're not the owner-operator anymore sometimes normalized out. You inherit a business and a trailing 12-month EBITDA that looks healthy, and then month one hits, and you discover that the normalized version of this business requires you to spend $40,000 on marketing just to maintain membership levels. And that's not in the number you bought. The car wash business also has a traffic dependency that people treat as obvious but don't actually think through. Your site needs to be on the right road, not just a busy road, the right road. Commuter patterns, traffic flow direction, the presence of competitor sites nearby, proximity to residential density. These are not soft factors you can adjust for with better marketing. They're fixed. You can't move the road. A car wash on the wrong side of a one-way arterial, or on a road that empties out after the morning commute and doesn't refill, is structurally disadvantaged in a way that no operational improvement will fix. The operators who consistently win in this business are the ones who treat site selection with the same rigor that a major retailer applies to new store openings. They pull traffic count data from state DOT databases. They analyze competitor density using GIS mapping. They look at household income in the surrounding radius, because higher income areas support higher average ticket prices and are more likely to sustain a membership habit. They study the ingress and egress geometry before they ever talk to a seller or a broker, because a lot that's impossible to exit efficiently without a traffic backup will frustrate members into canceling, no matter how good your wash quality is. The business also has a weather cyclicality that you never fully escape, even with memberships. Members don't use their membership more in bad weather. They use it less, or sometimes not at all for weeks at a stretch, but they keep paying. That's the beauty of the model. The problem is that new members are much harder to acquire during sustained cold or wet periods, because the impulse to wash your car correlates strongly with visible dirt. Winter in a northern climate slows your member acquisition velocity and increases your churn rate simultaneously. And the operators who don't build cash reserves to absorb that seasonal compression get caught in a liquidity squeeze that has nothing to do with the long-term health of the business. And yet, with all of that said, a well-located, well-run express car wash with a mature membership base is one of the most attractive small business investments that exists in America right now. The returns, when the model works, are genuinely strong. A site doing $1.5 million in annual revenue with a 40% EBITDA margin generates $600,000 a year in operating cash flow. On a $4 million investment, that's a 15% cash-on-cash return before you account for the appreciation in the asset value, which in today's market tends to run even higher than the cash yield. The combination of predictable recurring revenue, high margins at scale, low inventory requirements, and strong asset collateralizability makes it attractive to both operators and lenders in a way that most small businesses simply cannot replicate. There's also a real exit story here if you build it right. The consolidation wave hasn't finished. Regional chains are still being acquired. Private equity platforms are still writing checks for sites that hit certain revenue and membership thresholds. If you build a site to 3,000 members and $2 million in annual revenue, you are a compelling acquisition target. The multiple you receive on exit can be transformative. Multiple operators who got into this business in the mid-2010s with $3 to $5 million built regional chains and sold to consolidators for $50 to $100 million within a decade. That kind of outcome doesn't happen in every car wash, but it happens in this industry in a way that it doesn't happen in restaurants, retail, or most other brick-and-mortar small business categories. The car wash business is not the passive income machine that the Saturday morning line makes it look like. It is a capital-intensive, operationally demanding, weather-sensitive, churn-exposed business that requires real management attention, real financial discipline, and real site selection rigor. The people who treat it like a vending machine, put money in, collect money out, tend to find out within 18 months that the machine has a lot more moving parts than they accounted for. But the people who go in clear-eyed about the capital requirements, the membership dynamics, the equipment costs, the maintenance demands, and the traffic fundamentals, and who pick the right piece of land, build the right culture around member retention, and run the numbers with discipline, those people are building something that compounds. Something that, over 5 to 10 years, can generate a level of wealth that the original investment doesn't obviously predict. The car wash doesn't care if you understand it. It will wash the same number of cars on your Tuesday, whether you've read the unit economics or not. But your bank account, your stress level, and your ability to sleep without checking the member churn report at 2 in the morning. Those things care enormously about whether you walked in knowing the real version of this business or the Saturday morning version. The real money in any business has never been in the transaction. It's always been in the relationship. A customer who pays you once is revenue. A customer who pays you every month without thinking about it is an asset. And the operators who figured that out early enough didn't just build better car washes. They built something closer to a utility, boring, predictable, essential, and quietly extraordinary in the returns it generates over time. If this is the kind of business breakdown that actually helps you think differently about how money moves through an industry, there's a lot more where this came from. New videos drop every week. Subscribe, and let's keep going.